your country, just comment your country, or even add your seat so that we can know where we are joining each other from. Nigeria, okay, that's wonderful, that's wonderful. South Africa, that's great, that's great. South Africa is very close to me. Actually, we are just like, we are inside South Africa. So yeah, just comment about where you are joining us from. Just comment with your country. South Africa again. Okay, Peter and Anis from South Africa. Jody from South Africa. That's wonderful. It seems like we have a lot of South Africans here. That's wonderful. That's wonderful. So even if I can speak in my home language, they can hear me. Eswatini. Okay, that's good. That's good. That's good. Hey, me, I'm not yet used to say Eswatini. I'm still used to Swaziland. So yeah, Swaziland and Eswatini is just the same. So just comment about where you are joining us from so that we can begin, about your country, or you can even add your city so that we can know if we are close maybe to certain people. South Africa, okay, it's like South Africa is dominating the group, is dominating the meeting. Germany, wow, that's wonderful. That's wonderful. That's wonderful. That's wonderful. Let me just stop that video. It will finish. One network. Okay. German. Okay, so far it's German who is far. Let me share my screen. Can you guys see my my blue circle? Can you see my blue circle? I want to know that we are together. Can you see the circle, the blue circle right on the corner there? If you can see it, just comment. Can you see the blue circle? Okay, I can see it. Okay, I can see it. Okay, I can see it. Okay, that's wonderful. It means that we are together. So let's get started. So we know that from yesterday's post, we are here to discuss on how we can trade indices using indicators, or why should we even involve the indicators, or how should we even use the indicators. So it's basically indicators and indices. So I hope everyone here is trading indices. Like yesterday I asked if you are trading forex, just comment with F. If you are trading indices only, just comment with I. If you are trading both, just comment with B, so that we make sure that everyone who's here, this content is fitting for everyone. So okay, indices and forex, so which means you are trading both. Okay, anyone who's not trading indices here, both. Okay, indices. Anyone who is not trading indices, so that I will know that I have to include even how that person should get started in indices. So I hope everyone here is aware of indices, synthetic indices. I hope everyone is aware of that. Okay, so let us just begin. So okay, if I can ask this question concerning indicators, do you guys like do you trust indicators, or maybe you do not trust them? You like, hey, these things doesn't work. Do you trust them, or you don't? Or you are just in the center, like, hey, I don't know, sometimes it works, sometimes it doesn't work. So like, do you guys trust indicators? Like, seriously, do you believe in them, or you just don't trust them, or you are just in the middle? Okay, Mozambique, I am more trust, support and resistance, breakout and retest. Okay, probably that's not an indicator. I don't trust indicators. Okay, that's wonderful. So I just want to see like, where are we, so that I can know how to put this information. I don't trust. Okay, So yeah, I know that a lot of people, they are in the center, and a lot of them also don't trust them. So it's like majority of people, they are in this side. Some they don't trust them, some they're like, they're just neutral about indicators. Some they don't care even about them, because when they go to the internet, they find that some people are encouraging them to use them, and others, they are discouraging the use of indicators. So yeah, it's like there is that a lot of conflict around this issue of indicators. But as for me, what I can say is that, okay, when they formed these indicators, based on certain information. So it was not like someone who just decided that, okay, let me just form maybe lines like moving averages. So what we need to know is that these indicators, when they were formed, it was based on very, very important information and important background of the market. So it was not just something that they decided just to add on our platform. So what we need to know is that it is based on important history of the market. There was a clear study of the market before they came with indicators. You see, so it is an important thing. Let us not just mark indicators as something which are not good, although we don't trust them. But let us know the truth that, okay, indicators, they were formed and they were approved. So for the fact that we have indicators on our trading platform, it means that these things were approved, that it can add value in our trading. You see, it was approved that indicators can add value in our trading. So but then the problem comes when we tend maybe to use indicators the wrong way. Even my wrong is wrong. So yeah, so the conflict came when we used the indicators the wrong way. That's where we will then conclude that indicators, they don't work. You see, yet they work and they were approved. You see, a lot of research was done. These things were back tested and they were approved that, okay, now we can publish these things in our trading platforms. We can use these things in our trading. So even if you can study even like all the traders who were there like earlier, you can see that a lot of them, they were using indicators. A lot of them, it was not they were not like more traders who were involved maybe in pure price action. So a lot of them, they were adding maybe those indicators. If you can study even the old traders, the mature traders, those old guys who are still trading even today, they really love those indicators. They can be married to relative strength index, they can be married to stochastic, they can be married to moving averages. So okay, let us just go to our topic today, like how can we include it when we're trading maybe our indices, the volatility indices, or maybe let me say synthetic indices. So now here is the secret. As I always tell you guys, that when it comes to the question is so fun. Has the meeting started? Yeah, it has started, Ken. Okay, so like then now, as I always say that, okay, when it comes to indices, when it comes to these guys here, more the synthetic indices. So let me not just use indices, because you'll think of even Nasdaq or all those indices, but synthetic indices. When it comes to synthetic indices, as I said even yesterday when we began, that when it comes to synthetic indices, there is no psychology involved. There is no psychology involved. So now we have two categories. We have indicators and we have pure price action. We have indicators and pure price action. So what you need to know is that pure price action, it is 90% of psychology. You see, it is 90% of human psychology when it comes to pure price action, naked chart, support and resistance, or even going further, trendline trading. It is human psychology because it is based on the behavior of the guys who are buying and the guys who are selling. So it is based on real behavior of the buyers and the sellers. That is pure price action. You see. So but now when it comes to indicators, indicators, they are not directly linked to the psychology. You see, they are not directly linked to human psychology. You see. So when it comes to indicators, now indicators, that's why we have there's a video which I made about indicators. We have that's why we have leading indicators and lagging indicators. That's why we have leading indicators and lagging indicators. So when it comes to lagging indicators, they follow the price. But then when it comes to leading indicators, they lead the price. So I hope we are still together. Let me try to like clear my screen so that it doesn't look untidy. Okay, so that's why you have guys like leading indicators. This thing is like, I need to buy a pen tool. And that's why you have lagging indicators. Like, I can't even write well. We have lagging indicators. So if you use an indicator, guys, you have to first determine which is the indicator that you're using. Is it a leading indicator or a lagging indicator? So now here comes the secret. So if you are using a lagging indicator, okay, before I go to that, let me just first give you like why you should be using an indicator. So when we use an indicator, we can be using it to confirm. Like if we confirm, it means that it is not our primary analysis tool. So it is like secondary. We can use it to confirm, and we can some people, they use it as their source of analysis. Like it is just their source, it is their first choice, you see. So it is a source of analysis, you see. Some, they can use it maybe for warning or awareness. Even when it comes to divergence, it is like a warning. So some, they use it just for warning or awareness, so that they can check that if maybe there is something that says don't enter that trade, okay, I will respect it. So now here comes the secret. So firstly, you have to decide like in which category do you want to use those indicators. Like, do you want to use the indicator to confirm? If you want to use it to confirm, you should be having your first source of analysis. Like maybe let's say you are using pure price action, you see. But then now it becomes a difficult thing when it comes to synthetic indices. So if you will use the indicators to confirm, you have to have your first source of analysis. Or if you are to use them as a source of analysis, okay, then you can rely on them. And if you will have to use them as a warning, you will need to have these two: source of analysis and what to use to confirm your entries. So okay, let's say maybe an example of leading indicators, guys, it is oscillators like the stochastic or RSI. Those indicators, they lead the price. And then when it comes to lagging indicators, that way we have moving averages. So if you will be depending on moving averages, you need to know that moving averages or lagging indicators, they follow the price. So which means you will be looking the price from behind. You'll be looking the price from behind, you see. And if you use the leading indicators, they lead the market. So bear with me when it comes to writing with this mouse. It's a struggle. So when it comes to leading indicators, the oscillators, meaning RSI, stochastic, RSV, all those oscillators, they go forth before the market. So meaning you'll be looking ahead. So you'll be looking, let me just erase this thing. Meaning you'll be looking ahead, you see. Let me just write the A. So meaning you'll be looking ahead. So then you have to decide that, okay, if I use moving averages, which means I'll be behind I'll be looking the price from behind. If I use oscillators like stochastics, RSI and everything, I'll be looking the market ahead, you see, because they lead the price. The stochastics and the RSI, they don't care whether whether the market is still going down. Them, when they reach maybe let's say when they reach oversold, they will turn and go all the way up. Even if the price is still continuing to go down, them, they'll be saying, me, I am going up, I don't care what you are doing. So that's where we'll even find things like divergence, whereby the indicator doesn't agree with the price. See, so okay, is everyone still following? So I have to know that I'm not alone. So are we following, or is it making sense? Just comment so that I can know. Even if I just receive one comment, I will know that we are still together. Is it making sense? Is it making sense? Yes, okay. It means that we are still together. Okay. So now let us erase again and take it further. Now I can't even delete. Okay, I've deleted everything, but I'm just sorry. Okay, I've just came in. Welcome Kelvin. Welcome Kelvin. Okay, and now let's say maybe you are using your oscillators, meaning you are using the leading indicators. It means that now you'll be looking the price ahead. As I told you, you'll be looking the price ahead, but then in the moving averages or any trend indicators like Bollinger Bands, you'll be looking the price from behind. I came late. What is the topic? Oh, okay. Then we are just like speaking about how we can combine our indicators in trading indices, but anyway, it is applicable in everything, even if you are trading currencies. So we're just discussing on how we should apply indicators in our trading, you see. So I hope you get it. So okay, if you're trading, then will be depending on the oscillators or on the moving averages. So you will need to know that, okay, if I'm trading moving averages, you need to know that you are behind, meaning you are following the price. You are behind, you are following the price. But if you are using oscillators, now it means that you are ahead. It means that you are ahead. So both these scenarios, they have a sort of danger in it. There is a sort of danger in it, because if you are ahead, you can be too ahead, whereby you can buy yet the price is still selling, you see, and you can sell when the price is still buying, you see, because you go ahead. And when it comes to these guys here, you can be still looking that the price is going down, and yet you are now late. The price is now going to go up anytime. So meaning you are late, you are always behind when it comes to these guys here. That's why when the market goes up and begins to go down, you'll only see that is a downtrend here, because at this moment your moving averages would have not crossed each other, but they will cross each other maybe somewhere here. So then that's when you recognize that, oh, it's a downtrend. But here, when it was here, you couldn't recognize it. So maybe let's say you recognize it, that is a downtrend, and then that's when the market will collapse and go against you, because you are using lagging indicators that are coming after the price have played. I can't hear you. Okay, if you can't hear me, it means that the problem is with you, because everyone can hear me. So it basically means that there's a problem with your audio settings. So who is this one who can't hear me? Will me just tell him privately that, hey, man, you need to check your settings. Okay, so then you will know, guys, that okay, if you enter the market and the market immediately goes against you, or maybe your trading is relying on moving averages, you need to know that, okay, I am approaching the market in a late, like I am behind. So if you are using oscillators, you need to be careful again, because you are leading the market. You'll be looking that, okay, now I'm buying, yet the market is still yet to sell. So now here is a major reason, guys, that why do I encourage indicators when it comes to indices? You see, me, okay, the truth, let me just speak the truth. Me, as I always say that, okay guys, I do trade forex, and I also trade indices, I mean. So I trade both, and I can't stop trading forex for major reasons. That, okay, risk here, it is very low. Yeah, there is very limited risk. You do not when you lose your money, you do not lose money as it is in indices. So I trade both, but then when it comes to forex trading, I will never ever use indicators. You'll never see me using indicators, even if you can check the YouTube videos that I post. When I post videos concerning currencies, you'll never see an indicator. But when it comes to indices, that's where I can use indicators. And the simple reason is what I told you when we began, that when it comes to naked price action, you need to know that there should be psychology involved today, because all the price action patterns, they came based on human psychology, based on the behavior of the buyers and the behavior of the sellers. But then the reason I'm using indicators when it comes to indices, it is that in indices there is no human psychology. There is no human psychology. So then I compensate by adding indicators, because like when I started trading indices, I tried to implement my price action knowledge. I tried to implement everything naked chart trading, but it couldn't work. So then that's where I found the mystery that this thing, man, there is no human psychology. There are no real buyers and sellers. So that's why pure price action, it is not that accurate when it comes to indices. So that way maybe I form strategies based on indicators. And mostly when I form strategies, my secret is that when I form strategies, I don't form strategies which are only based on oscillators. I don't form strategies which are only based on lagging indicators. When I form strategies, I usually, and in most of the time, I combine both of these. So meaning I combine leading indicators and lagging indicators. So that's another tip, guys, that you need to know, that you need to combine both of these type of indicators. Don't just rely like only on moving averages, but rather combine them both. That, okay, I will combine them both. I will just be the guy who is on the center, meaning you'll be looking back and you'll also be looking ahead, you see, meaning you'll be on a safer side than someone who is only looking behind using the lagging indicators. But you'll be looking forward and behind. So meaning you'll be just on the center, like, okay, me, I wait for my moving averages to cross, and then I see my RSI. What is my RSI doing? So there is a strategy that I formed based on moving averages and RSI, and yeah, it was the best strategy. And also the strategy of Bollinger Band and stochastic, also a wonderful strategy. So I discovered that, okay, those strategies that I formed based on combining both of these tools, it becomes a powerful strategy. So even you guys, when you trade, don't just rely only on moving averages or oscillators. Just combine them both. So that maybe your trading can be filmed, so that it can make a little bit of sense. So I hope I'm being understood. So now here comes the worst part when it comes to indicator traders who trade with indicator. Now here comes the worst part of it, is that people who trade indicators, people who like trading with indicators, they tend to forget about the real deal, which is price action, or which is psychology. I'm now talking based on the grounds of forex, because I know that most of us here, we were traders of forex, and maybe we converted to indices. So now I'm speaking based on trading like at large. So when we use indicators, they give us this mindset that we need our trades to be 100% accurate all the time. So like when you tend to be addicted to indicators, you'll be always in the internet just searching to find that accurate indicator, searching to find that 100% accurate EA. So it, like, there is this addiction that comes with indicators. So we have to avoid it, guys. Make sure that when you use indicators, you also keep it in mind that there will never be a strategy that will rise and that will give you 100%. That one, you need to accept it, guys. There will be nothing like that. There will be nothing like a strategy that will rise and give you 100% win rate. So that one, you need to keep it in mind, that when I'm using the indicators, I know that the indicators will sometimes give me negative returns, will sometimes give me negative trades. So if they give you negative trades, you should be ready. You should be not be like someone who say, let's say I receive a loss and I'm crying, but you should be excited, because losses, they are part of trading. You should know that, okay, I've received losses, because once you receive losses and you become angry, you need to know that that's where you'll be fighting the market. And when you enter your next position, you'll be entering your next position with a big lot size. You'll be entering it with 20.0, trying to recover what you've lost, because you were not expecting to get losses. So now when you get losses, you are frustrated. You are now trying to revenge in the market that, hey, I need to recover this. But just relax and know that, okay, when it comes to indicators, they will also give you losses. So you should be excited about it. Now when you speak these things, that's whereby people like they no longer like entertain that particular meeting. When you speak the reality, that, okay guys, you should be ready that when we use these indicators, we will find losses, we will experience losses. So the best thing that you need to do, don't be like those guys who because people who trade indicators, they even lose the sense of risk management. They even lose the sense of risk management. I don't know why. People who trade with indicators will find that there is no stop loss, there is no take profit. You see, it's like they just lose the sense of risk management. So let us not be like that, guys. Let's go there. If you use indicators, what I can tell you, and what I always say, is that, okay, a lot of people who form strategies and they post them. Okay, what I can say, that those strategies, maybe they tested them and the strategies are working, but the simple reason the strategy is not working for you, it is that you do not even add the risk management. You don't even add the risk management. I can testify, every time when I post a strategy, people will be saying, the strategy is very wonderful, the strategy is working, but they will use it like 2-3 days. After that, there will be that feeling that, this thing is not working. But at the first, when you saw it at the first time, it was like, this thing is just wonderful. But then as you trade with it, it's like it's not working. Is it the strategy, or is it your risk management? Because if you lose 20% in one trade, and then you tell us that the strategy is not working, or maybe signals are not good, you lost 20% in one trade. Is it the strategy? Is it the signal provider, or is it you? You see, so the problem is not with the strategy, no, with your ment or what. The problem is with you. How can you lose 20% in a single trade? How can you lose $10 if your account is $50? How can you lose $100 if your account is $300? So the problem is not with strategies. The problem is with you. Just fix your risk management. So I hope it is making sense. So yeah, we are left with 7 minutes here. We're left with 7 minutes here. I will just allow you guys to ask something. If you have any question, you can ask. If you have something that you want me to tackle on, you can just ask. I just open this opportunity for you guys. And please note that we'll be having like the webinars like frequently. We'll be having them like frequently. So yeah, you will be having them like frequently. So if you have any question, you can ask, guys. You can ask. If you have any question, you can ask. Any question. Any question. And if you are not in the free Telegram channel, there is a link. You can join the free Telegram channel, and just you can share the link wherever you share it. You can just share it. I want us to be a big community. So even I am working on something, as I told you that we'll be finishing our website this month. So what is in my mind is that, okay, please just give us best indicator to help with VIX. Okay, okay, I'm left with 6 minutes. Okay, I think I will just attend that question in 2 minutes. So okay, what I'm planning to do, guys, is that I'm planning to form a community. I'm planning to form a community. Oh, my mouse is jamming. I'm planning to form a community. So in the community, I don't want like maybe to say it's only me who is giving signals, only me who is doing this. So I just want a community of traders who will be just having like a meeting like this and discuss on which strategy we will use, and then we will be trading with the strategy, all of us, and everyone will be spotting an opportunity and post it in the community, not that it will be just one person. So yeah, just join that free Telegram group. You'll get all the updates there. When I finish the website, probably this month, I'll then be forming a community where we will be just be trading indices and currencies like as a group. You see, which indicators and what settings do you recommend? Okay, let me just attend that question at the moment. Let me just attend this question at the moment. Okay, I hope, guys, you can see my chart here. I hope you can see my chart. Can you see my chart so that I can just be quick? Yeah, okay. And I will recommend, guys, a strategy which I once posted on YouTube. I will recommend it. Strategy which I once posted on YouTube. It is a strategy that used Bollinger Band. So if you once used it and you threw it away, go and use it again. That is strategy that I will recommend. It uses Bollinger Band. So let me just try and insert it and then delete this personal indicator. So yeah, I will recommend this one, guys. I will just recommend this strategy. So let us just break it down. So this is simply Bollinger Band, and I think the period it is 34. Let me check. We are left with 3 minutes. So yeah, it's 34 period, and this is the stochastic. It's stochastic 8066. So I recommend this strategy, and then let me just break it down, like how we can use it. So what you need to know here, guys, is that, okay, you should be using two time frames. You can use the 30-minute and the 15-minute time frame. So I hope it is making sense. Where is this tool here? Okay, there it goes. So you can use like you need two time frames. Let's say maybe you are using the 30-minute and the 15-minute. So I think in YouTube I didn't explain this. So in both these time frames, guys, you'll be looking for a same scenario. What is the scenario? You'll be looking for whereby, let's say, the price have breached. If the price bridges the Bollinger Band upwards, you are looking for a selling opportunity. Then if the price bridges the Bollinger Band upwards, you should be looking for your stochastic to be overbought. You see, when your price break the Bollinger Band upwards, you're looking for a selling opportunity, and you'll only sell after the stochastic goes overbought. You see, and this scenario, guys, it should apply on both of your time frames. You should be seeing it on the 30-minute and on the 15-minute. So it should be one thing. You see, like let's say here, let me make an example here. Let's say price is breaching the Bollinger Band, we can see, but then we need our stochastic to show signs that, okay, now I am going down. So if it shows signs that now I'm going down, that's when we are going to press the sell button, and even in the lower time frame it should show the same thing. You see, so I can see now that our lower time frames were much ahead than our higher time frame. For an example, let me check the 10-minute. Where is this thing? Do you see that the 10-minute price has been breaching the Bollinger Band, and our stochastic has been playing games? It has been crossing, meaning it was giving a signal. However, our higher time frame was a bit behind. So you have to make sure that all these things are in line. And when you take your trade, guys, you take your trades in the lower time frame. So yeah, I know others will take me bad, like, why did you share this like when time was running out? So you should be taking your trades in the lower time frame, like in the 15-minute, but in my case I've opened the 10 minutes. So you should be taking your trade in the lower time frame, you see, in the lower time frame. And the important thing is that this thing, guys, it should be in line. It should be doing one and the same thing in both your time frames. Let me just check where is this thing. Less than a minute. Wow. So yeah, guys, what I'm saying is just go and apply it. You should be taking your trades in the lower time frame. You should be taking your trades in the lower time frame. Where is this box now? Yeah, I don't have time. Okay, there it goes. So you see, in this scenario, I took a buy here. When I took a buy here, it was actually the price, stochastic was below, and price have breached the Bollinger Band out on the downside, meaning I was looking for a buy. So I took a buy here, and the most important thing is that my higher time frame and my smaller time frame were saying the same thing. So you can see that here it was breached downward and my stochastic was down there, so it was the same thing. So the trade the trade was profitable. Yeah, so the meeting is over now.